Need help with tax, don't know what to do. The Brysons are here for you. We know every tip and trick. The serious tax talk with a Louisiana twist.
Good morning, everyone. We're here today with Talkin Tax. We have a little different format for y'all today. Angie and I are going to host this podcast. And another little twist is Angie's not in studio today. So we're going to, we're trying this, something a little different. So we hope you enjoy. Please leave your comments and thoughts if you like it or don't like it, and let us know something. So we're here with Talkin Tax.
Questions. They can leave their questions. Yeah.
Absolutely leave questions.
Yeah.
Comments.
Yeah.
And so today we're gonna discuss the offers and compromise.
My favorite. This is my favorite right here.
It could be your favorite. This might not be my favorite, but
what is your favorite? What is your favorite?
It's definitely probably not.
LSU football.
Yeah,
We're not talking football today.
It's probably not Talkin.
It's not that time of the year.
No, it could be. But
recruiting is in heavy.
Are we going to talk LSU recruiting?
Summer practice.
Oh.
No, let's talk about offers. Our team will hate us if we talk football today.
You're right. You're right.
I'm not the right guest for that anyway.
Okay, so let's get back to offers and compromise then. I guess we'll have to talk about that and not talk about LSU football. So
not today.
Okay. All right, so offers and compromise. I was going to say, although they're Angie's favorite, they're not necessarily because I think they're the most overused and amplified thing, and it's what the national marketing companies rely on a lot.
No doubt. Yeah.
And they take advantage of people, and I don't necessarily really like that. But I guess from Angie's perspective, they really are a great tool to use in resolving cases. And it's probably one of the favorite for taxpayers because if they're through, they usually pay less than what they owe. So it's a settlement with the IRS. So I guess from that perspective, it is good. I just don't like it because it's abused. And a lot of times that abuse ends up hurting the taxpayers even more. And
I think you need to probably start at the beginning.
Yeah, I'm sure we'll get into that later.
Well, we can. Offers is what everybody wants an offer. How often do we talk with people who come in and say, first meeting, I want an offer. And I think the trigger for that is a lot of the ads that you're talking about that are on TV and radio, get a fresh start. And fresh start is the buzzword.
Yeah, well, tell us about the fresh start then. Why don't you tell us about it?
Fresh start is it. It was an initiative created by the IRS several years ago in the government to assist taxpayers in getting a fresh start. I think it's like a mini bankruptcy, right? I know that's maybe not a great, people don't want to hear that, but when you owe the IRS, a lot of times you need a fresh start. Just if you owed your, I don't know, your medical bills, your house, and if you find yourself in a bankruptcy type situation, this is like a mini bankruptcy as far as I can look at it, to give you a new place, a new start to handle your tax issues so you can move forward. If you go online and you Google fresh start or offering compromise, all of that's going to come up together in one place. With that being said, the Fresh Start program is what those TV ads and people use a lot to get people's attention to handle their IRS problems. So yeah, it's a fresh start. It's a way to get to, it's a settlement basically.
Yeah, and we probably should say the Fresh Start program is more than offers. It includes
for sure.
Offers, of course, is the most attractive because
it's not new is the thing.
That's what the gimmick is from the national marketers, is they act like it's some new program. This thing's been around forever. It's probably almost as old as me.
And it's also not easy. So that's the caution. Yeah.
I'm glad I got to slip that in and nobody caught that almost as old as me, because it's not quite that old, but anyway, yes, they've been doing some form of fashion of this for a very long time.
Yeah,
and it gets modified all the time, and I guess the national marketers can pick up on that and say, get the Fresh Start new program. Well, it's not a new program. They just maybe change some requirements. So let's talk about just the offer and compromise under that program. It's probably, as far as I would say, it's probably one of the things that requires the most detailed work from us to get the correct offer and get it processed through the system. And that's because it's an analysis, it's a full analysis of the taxpayer. They're looking at both sides. They're looking at income, they're looking at assets, and what we would commonly refer to as collection potential and ability to pay. And how are those arrived? Ability to pay is the income minus the allowed expenses, and the collection potential is the net equity in all your assets. Once you get to those numbers, there's more work to be done. So it requires this very detailed analysis. And I think that's probably why, not to jump ahead, but that's probably why a lot of them are denied. I think probably 2/3 of them are just denied outright because the detailed analysis isn't there. And if you do it improperly and you don't qualify, you don't qualify. It is a formula. It's a mathematical formula that you have to meet to qualify for it.
I think that's the ticket. You have to qualify.
Yeah.
I can't just make an app. And the misconception, especially because we're attorneys, but the misconception is that someone can come into our office and say, oh, I owe the IRS, I don't know, pick your number, $1,000, $200,000. I need you to settle my tax debt. And the misconception is that this is very much that our work is like traditional legal work in the sense that I can walk into a room in a mediation type setting and say, I want to settle. And we meet in the middle and we put all of our cards on the table and we meet somewhere in the middle, like a personal injury case or a business litigation case. It's not like that with an offer with the IRS. And this is the challenge we face a lot of times with getting on the same page with our clients. You said it, you've got to qualify. And to qualify, you've got to go through that detailed analysis that you were just talking about. So that it's a snapshot in time with your finances is the way I look at it. What does your income look like? What are your expenses and how much of those expenses is the IRS going to allow? Because in their infinite wisdom, they have decided that there is a recipe for that. And then what does your equity and your assets look like? So do you have a house that's paid for? Do you have a camp in Grand Isle that's paid for, or wherever, Colorado, whatever, on a second home? So all of those things get plugged into the IRS formula. And that's the work that we do on our side to see whether you quote unquote qualify.
Yeah. I was just thinking that we probably, just for clarity's sake, maybe step back, because you and I both are immediately jumped into the most popular one, the doubt as to collectability offer.
Yeah,
There are
that's
other
the big one.
There are other kind of offers. There's the doubt as to collectability, which we've been talking about, which is
that's the financial one. Yeah.
The financial one. There's also the doubt as to liability, and then there's one that's effective tax administration. I don't think I've ever filed an effective tax administration. Have you, Ange? I think you filed some.
Yeah. So there's three big ones, like you said. The doubt as to collectability is I can't pay this tax. Please work with me. My finances have changed, and that's the one we were just speaking about. The doubt as to collectability is I don't owe this tax, and you made an assessment against me improperly or erroneously, and for some reason now I have this tax bill, and that happens.
Yeah, I've used that one.
That
will come up. Not as much as the collectability, but that will come up. Those issues
If you have an audit that goes weird, and then you can later prove that it shouldn't have happened that way or something like that. And then, the effective tax administration one is a special circumstances. I'm older, I'm not working anymore, I'm disabled. In the government, I may have some equity and assets that in a mathematical formula would look like I could pay this tax, but I need the equity or I need the finances to pay for I'm sick, assisted living, I'm older. Like I said, I think previously, it's just, I don't want to say it's a fairness analysis, but it's special circumstances potentially where the mathematical formula doesn't work, but the circumstances need to be considered to get this person to a place of settlement.
Yeah.
Or business or whatever.
I think the example that I was thinking of, I thought maybe it was you, but maybe it was one of the other lawyers in the company that did it. It was an elderly woman. The house was paid for. They had equity in the house. But if they sold their house or went and got a mortgage against their house, either one, and got the money to pay the offer, they'd have a house note, or
which they couldn't fund
to go rent or go buy another. And they couldn't afford to pay any more notes. Their house was paid.
Yep.
And I think they were able to get that through. They just disregarded the equity in the house, so they were able to get an offer through that they could.
That's right. That's a great example.
That was what I was. Yes.
Yeah.
Okay. All right. So I guess for purposes of today, though, not to make this podcast too long, is I still find it hard to believe that people really want to listen about. But anyway, so not to make this too long, I guess we should talk about the doubt as to collectability. We'll kind of limit our thoughts to that.
That's the big one. Yeah.
And that's the one we talked about, where they're going to examine your.
Although I will say, what's this caveat?
So wait.
Are we having technical difficulties?
Yeah, I think something's going on here.
I think I will say that with the caveat that doubt as to collectability is the most common offer utilized by tax professionals, but a lot of the other two that we were speaking about, a lot of tax professionals miss. So they're underutilized, in my opinion. So let's just leave it there. It's a podcast for another day, but
Okay. That sounds
Yeah.
like a good topic. So we'll talk about that.
yeah.
So let's talk about when we file the offer and compromise, the two forms that we need to file and what they look like. Why don't you tell us?
Okay. So there's two forms. There is the 433 form, which is the collection information statement for an offer, and that's basically the financial analysis. It's essentially a cash flow statement with some equity components on it. Basically, here's your income, here are your expenses on the form type table with the presentation. You can look at that form online. If you go to the IRS website, there's no secret as to what the form looks like. The artistry comes into figuring out how to present your income and what does that really look like. It honestly, with a snapshot in time, what's it projected to be if you're self-employed? There are a lot of moving parts there, and it seems simple on its face. However, you and I both know that it's not always that simple. If you're a W-2 employee and you have the same income every month with no bonuses, and then it is pretty straightforward, but it's not always that simple. And then the other form is, so that was the 433 form. The other form is the 656 form for offers. And that's basically an encapsulation and summary of the 433 plus some additional components, and both of them require signatures by the taxpayers if there was joint liability for married taxpayers. And there's an attestation of perjury on there as well, that's why we are really particular about what we put on there for our clients, because you do sign it under penalty of perjury. That's a pretty basic overview of what we do, but it can be time consuming. It's not an easy process.
Yeah.
You do it correctly
all the time. The offer package, if it's thicker, the better. So I want my offer packages real thick because I
can't hurt.
got to have all the supporting documents to go with everything. You can't just say, well, these are my bills. So you got to prove that these are your bills.
Yeah,
This is your income, and this is your, and how much.
Yeah.
So it should be
I
a
mean,
relatively thick package that you filing with the IRS. It shouldn't be something.
I've seen pretty bare bones presentations where clients will come in with a rejected offer package. And it's just the forms, and there's no substantiation behind what's
And why it was rejected, or
and there's a whole different implication set there when you file an offer and it's not substantiated, and it's going to get kicked back just basically as a matter of course. You're interrupting the collection statute expiration dates, which is a whole different issue about layer on what we do and how we impact our clients' lives. I don't even know if that's on the slides that we have.
I don't know.
To go with this show.
I would add though, in something that I see, because the IRS will they won't even take the time to reject it. They'll just send them back sometimes.
Not processable.
If some things aren't right. And it's
not even pass the smell test.
They just kick it. They're looking for a reason to get rid of the thing. That's the last thing they want to do is to decide the offer.
That's a nice segue into the next slide.
And that's it's like we've said before in everything the things that we need to address first. You have to be current. You have to be compliant. You have to be current to be compliant. If you're not current and you're not compliant, don't file an offer, because that's a waste of time. You're wasting your money and your filing fee that you're going to have to pay when you file the offer.
And the down payment.
They're not sending that back.
Yeah.
You're going to keep that part, even though it's bad and it's missing. It's a defective as to form or something. They don't return that money.
Yeah, because you've got to put a 20% down payment down, which is something we probably should talk about. But
yes,
a
20% down of the offer amount, not of the tax ability of the offer amount, and you got to pay a filing fee.
So you're starting all over with a new 20% deposit if you don't do it right the first time.
Yes, and if you have to do it again, you got to pay another 20% deposit.
Down payment.
Down payment. You're right. So, so to be current, and just to be in all thoroughness, so we could say current is we're talking about the current year taxes. You can't, if you're self-employed and you file an offer in July, you got to have your estimates up to date through July, or the IRS is not going to take it, because in their mind they're thinking one way you can look at it is if we grant the offer, you're just going to default again because you're going to owe for the following year. So we're not wasting our time because you're just going to keep defaulting. And compliant is all your filings have to be up to date. It's that simple. So you got to get everything filed, and you've got to address the current year that you're in. And you have
Right.
to be prepared to continue on that process, because in 6 months, if they look back and you're not current and you haven't made any more estimates, they're going to send it back. Yeah, they're probably going to send it back without even rejecting it. They're just going to send it back and say it's not processable. So,
Well, they send it back and they'll send it back and say, you're not current.
yeah, you're not
I mean,
current. Boom, you're out, and they
yeah.
keep you 20%, like we talked about. So it's very important that our taxpayers, if they're going to file the offer, that they're current and compliant before they ever file the thing, and they remain current and compliant during the process. And I guess we need to add, even if the offer's granted, they have to meet the filing requirement for 5 years, and they can't incur any future liabilities for 5 years. So we need to make sure that's clear and people understand that, because they're not going to get a refund for a couple of years, and they're also not going to, if they miss filing in year 4, it all comes back.
It's interesting you say that. I'm working on a case right now for a client that we got a really good offer for, and it defaulted because of not. And we did our due diligence for him and warned him, and I don't know what happened. I can't. Of course, I wouldn't say anyway, but I mean it happens to people where they get really nice offers and settlements, and then they don't follow up or follow through. I guess the caution would be, make sure you stay engaged with a good tax professional, your CPA, tax preparer, and stay current. It's a lifelong, we talk about this all the time in other contexts. You and I do. There are things in life that are journeys, and there are things that are destinations. And I mean, taxes, there's no destination. It's a journey.
Unfortunately.
It's going to be with you for the rest of your life, unless something dramatic happens. So once we get the offer, that is back to the beginning. That's a fresh start to the rest of your journey.
Yeah.
Yeah.
But you still have to stay in the journey. You can't go back to old habits.
No, otherwise you're back in the ditch and you're digging back out of a hole.
You're digging right back out of the hole.
Yeah.
And I would add, wrapping everything up, the offer acceptance rate is not that great.
No.
Way back when it was 10% or so. It is going up a little bit. They have loosened some of the rules, and it's getting better. It's probably up to a third or something. Is it 33%?
Yeah, it's about 33%. Yeah.
The acceptance rate, which still not great, but so there are a lot of other issues that are involved with filing the offer. And then I guess another misconception about the offer that I feel like we would have to talk about, just to make sure people know before they would try to file one, is that it's not quick. It takes a very long time.
No.
What the last one you filed, how long did it take to come through?
So the kicker is they pretty much always get denied. When you file an offer, it gets put in line essentially. So it goes to an offer examiner, and that examiner is not necessarily in the IRS hierarchy. That person's not at the top of the totem pole. So the examiners look for the things that we were just talking about. Are you current? Are you compliant? They're doing, I want to call it a jurisdictional check. So like when we worked at the Louisiana Supreme Court, do we have jurisdiction? Right. So they've got to check all those black and white items off. And if one of those is not met, they're looking for every opportunity to kick it back.
Well, I'll tell my clients that that person's job is to kick that thing out without it being.
Boom. Yeah.
So anything you do, no signature, it's gone. No payment, it's gone.
No payment.
Missing, it's
processing
gone.
Fee. Yeah, exactly.
So they're looking for reasons to not have to decide the offer.
Yeah. If you filed one today, it could be up to 8 months before that person, the offer examiner, picked it up to review it. And then there's some back and forth and we create a lot of no, we disagree. And ultimately more than 80% of those get denied by that first offer examiner level. And then we have to appeal. We get, what would you think? Like over close to 80 to 90% of our offers are resolved with appeals. Wouldn't you agree? At least.
I think the last time I looked, and it's been a while, but the last count I did, we were close to 90% of our offers ultimately being accepted.
Yeah. But that's because we're so diligent.
But we also don't file junk. No. We know we pretty much know before it goes in or out whether.
You look, you're not doing a client any favors if you tell them I'm going to get an offer. No. And you're not transparent with. I had a conversation with somebody last week. I'm happy to file this offer for you, but this is not in your best interest. And here's why. And this person was very appreciative. Thank you for telling me the truth. I needed to hear. Sometimes delivering a hard message is hard, but people are appreciative most of the time. But most of our stuff gets resolved with appeals because those people have discretion to think out of the box, deviate from some hard lines. And that takes from start to finish from filing to offer examiner to appeals it's a good 18 months, if not longer. And COVID has thrown a whole new wrench in good ways and bad ways for everything we do, frankly. We've actually gotten some offers accepted that we filed a long time ago just perfunctorily because I think they're past the 24-month consideration mark and they were good offers.
Yeah.
So they just were deemed accepted under the statutes.
Now, before that was rare.
Oh, very rare. They just kicked it back. They just denied it.
Right.
Yeah.
Now we're
Yeah.
having to pay attention to that, the 24-month rule.
Yeah. There's a lot of noise about that right now. Yeah.
Okay.
The only thing we haven't talked about is the collection statute, which we can do pretty quickly, and the caution with that, if you'd like to. It's
You
not
mean-
on the slides.
Yeah. You're meaning, I thought we did talk about that, but maybe we didn't, about it. The fact that it tolls the statute, that it stops it from running.
Yeah.
So basically, the IRS has 10 years to collect your tax from the date that it was assessed. So that's just a general rule. But when you do things that would stop the IRS from collecting that tax, the time period is suspended. That time, and filing an offer in compromise does stop collection. So when you do that and it stops collection, that time that it stopped or it's pending suspends the statute. So it's basically added on to the end. So you're giving
Right.
the IRS more time to collect the tax. And unfortunately, and I have seen offers filed months before the statute's about to run, and the IRS gets basically a time to regather itself and collect the tax.
Another reason to make sure that it's in your best interest to propose a settlement agreement.
You absolutely need to know all the facts and then
Right.
what's the appropriate time to file the offer, because
Timing.
and it could be certain time. Most offers are for more than one tax period, and some of the older tax periods are the earlier filed tax periods, we should. So the statute may be able to run, so you may have to wait a little bit and let those statutes expire, and then file the offer for those ones with a viable statute.
Yeah. You met with a client yesterday where there's no reason to file an offer because there's no. Yeah.
It's a waste of time. It had better options for resolution.
And it's perfectly legal because there is a collection statute for a reason. And if the IRS is not pursuing collections and you're not at risk for levy or active collections, then it's okay to just sit back and watch. Yeah.
Yes.
Yeah. But I've seen a lot of professionals mess up and file offers for clients, and not to throw shit. It's just a very important factor that needs to be evaluated before, even if you file your own offer, before you do that.
Okay. I think that's probably enough. The offer in compromise, if you have any questions or comments or anything, please leave us those thoughts and those questions. And
So we're going to post a slideshow in the show notes, I'm thinking, once we get everything.
Is that how
Yeah,
that works?
Yeah, you can see I'm pretty sure that's how it works. Yeah.
I didn't know that.
Rookie podcasters.
That's our intent anyway.
Any questions can go to brysonlawfirm.com. So somebody can field those and we can, of course, help.
All right. Okay. Well, thank you for joining with us today, and we will talk to you soon, hopefully.
Next time. Bye-bye.